Hello, it is the 10th of February 2011. Welcome to today's Silver Log, and this will be entitled 44 Candles. We'll be looking at technical analysis on all time frames from the shortest of time frames, which is this chart here, the 1 minute chart, to the longest of time frames, which would be the yearly chart. We'll talk about Fibonacci, but we'll start off with the basics of candlestick charts. When you see these candles, if you see a green one, what this means is the open for the time frame occurred at the bottom of the bar, and the close would be at the top part before the line. If you do see lines, like say for example on this one in here, that means it opened here, it managed to reach to this point here, but it closed in here. And same thing with the red. I want to find one, for example, this one in here, it opened here, it closed here, and during that time frame it was down here and it was up there. So that's the basics to candlestick charting. And within this time frame here, this should mean nothing to you, because if you are a 1 minute time trader, this is history to you. This is old school news and means nothing for the long-term perspective, that is. And within this chart, you can see, well, where we came from, where's it have the potential to go. It was ranging, started to go towards the upside. So that was, it ended the day with a very bullish pattern. And in fact, as the market closed after 4 o'clock, it did manage to make it above the 30-20 level. And for the code of each of these, it's going to be XAG/USD. AG stands for the metal of silver, and of course this is priced in US dollars. Now, as far as Fibonacci, on each one of these charts I got the low and the high, but for this one, Fibonacci really doesn't mean too much. That's the 1 minute chart. Now we're going to switch to the 5 minute time frame. And within the 5 minute time frame, once again, really not much going on here. This means absolutely nothing to long-term investors. And this I think it's important here is this candle in here. It had a nice gain, and it's more of a indecision when you see a candle of this nature. Still not too sure where it wants to go, but the trend ended towards the upside. And I'm not going to spend too much more on this 5 minute chart. On the 15-minute chart, what I've done for each one from here on in, I've written down current Fibonacci. So I'm going to go through Fibonacci on this one. And within this, we have a low of $29.64. And it says here, this sideways chart, it ended the trading session at the key 30.06 Fibonacci level. The 29.64 low occurred before the market opened in the United States. It's the SLV chart, and actually when I look at this, the data isn't quite exactly as I'd want it to be presented, but like I said, I don't want to spend too much time within the shorter term charts. Now, as far as the hourly chart, going back to February the 2nd to the close today, it hit a low of 27.95 and a high of 30.50. So therefore, the first Fibonacci level is about 28.92, which is roughly in this area in here. And the second one is 29.53, somewhere towards here. So it's holding up well right now. It says that it's holding well above 29.53, which was support not found on this chart due to this chart only tracking USA timeframes, because 29.64 was tested this morning at 8:30. So this level did manage to have a test, regardless of the fact it's in an uptrend. When you are at the top of a range or the top of the charts, that means you are very bullish, no matter which time frame you're looking at. Now, as far as the daily chart is concerned, the It says here for current Fibonacci, market is bullish as it is holding above 29.33, which is the next probable level to be tested at the previous high of 31.28. Let me just take a look at how I wrote this. Okay, so now as far as Fibonacci within the lows, we take a low of 26.30, which happens to be right in here, and the high of 31.28, which is in here. So after we had this downtrend, it managed to come up to this 28.20 level, where it found some resistance for a little while. But what was strengthening was how it kept the upward trend. It got above this level to the next one. The next one is 29.33. Actually, it should be 29.38. That's a little bit of a typo. Regardless of the fact, that's only a few cents anyway. And 29.33, which was resistance for a little while, and then the breakout occurred, this candle in here, after it came above that 29 1/3 area. And then we have a two candle consolidation. Now this candle in itself is a pretty strong candle, because what happens, we're in an uptrend, which should be pretty obvious, and this candle tells us that we did test this lower level, but the bulls or the buyers were able to maintain control for the rest of the day, and thus it's had a price correction throughout that particular time frame, which is showing us a lot of strength. Switching this up to the weekly chart, and the weekly chart has a low of 17.74 and a high of 31.28. And the Fibonacci is 26.11. And when we came back down to 26.30, which is where this bottom is, the number 2 that is, it really showed us that that's really strong. You have the nice gain, you come back down to that level of support, and then you're progressing back towards the upside. So that's a very bullish situation there. As far as current Fibonacci, August 24th, 2010 breakout point was used as the low, even though the lowest point is 1708. This is 1708. And I could have used 1708 as the low for the Fibonacci, but I figure the breakout started at 1774 and the market kept going higher. So at this point I decided, you know what, I'm just going to go with the bottom level on this August 24th date. Now, as far as point 1 and point 2 upside target, if we take a look at within this chart here, this has mainly been a range bound over the last few weeks, or well, the last 7 candles, that is. And the number 1 point is the high of 31.28, and the number 2 point is the level of 26.30. And when you take this and make a 161.8% Fibonacci level, that gives us a price objective upwards to $34.36. And I'll talk more about that on this particular candle. This is the monthly chart. And for the number 1 section, this top here is 21.35 for March of 08. And this bottom is 846 from the fall of 2008. And it's obviously managed to get above that level, which is extremely bullish, of course. But what I did is I took the difference of those Fibonacci points, which gives me a target of 29.32. And that's where it's been consolidating now for the last, the last 3 months, January, February, and last December. And it's had enough resistance where it could very easily be able to get ready and break through, so that when we get into the spring, we could manage to get up to this next target, which is 42.21. So to take the Fibonacci, I take the level, which is 1.618, multiply the difference of the two, and add the bottom. You can use this for any chart. This doesn't have to be with silver. You can do this with gold. You can do this with equities like the Dow Jones, the S&P. You can do it with currencies. it really doesn't matter too much. It usually works very well for most charts, and therefore, when you're at the higher end of a range, and I'm looking more towards upside targets because if the market's bullish and looking to go higher, then this is what I find the easiest way to determine where it will be heading towards. All right, now we're at the quarterly chart, which is the second final one that we'll be using. And within this, we have a low of $4, which happened right down here, and the high of 31.28. And if we take a look at our current level, which was $30.10, it's at 98.2% retracement, which basically means that we are at the top part of the range in a bull market, looking to obviously go higher. If we take point 1, which was, we've already done this already once before. This is the highs of 21.35 and the lows of 8.46. Then our upside objective is really taking us to the 29.32, then the 42.21 level. But when we look at this on a candle by candle basis, you have a nice upward run, 2004, 2006, into 2007, and the consolidation here was a brief one, but it worked out very well, and since then it's been in a upward trend. And this isn't a straight line, but it has broken the upward trend of this, something like that. That's, to me, a very strong indication that it's been able to do so, and if it can close this quarter on a positive note, a green candle within this higher low here from this, and a higher high, then I would be looking for an explosive summer for this year as the market continues to head towards the upside. Finally, this is the yearly chart. If you don't care about the paper market and you want to get into these precious metals, this is the type of chart that would be used, or I think best used, for deciding when you want to get in and out, either the yearly chart or the previous quarterly chart. And within this, the Fibonacci that we have has a low of $1.25 and a high of 50. And that means that these levels here are exponential numbers, because when you get to big numbers, that's, I find, the easiest way. And that means as long as we're holding above $12.17 an ounce, we are bullish, which is obviously the case right now. But as it was going lower, let's just put a line in roughly around the 510 mark. This is somewhere in this area here. Probably a little bit lower than that, not much. We'll say right there. What happened was it came down and it found support. Then it really went below it a few times, but it really never, at one point, did it ever confirm that it was going to break below. For this rally from 1972 to 1980 to not become a failure, it has to hold $5.10 per ounce. So even though on many occasions it pierced below it, that's fine and normal within these Fibonacci lines. A small pierce above, small pierce below, that kind of stuff can be very, very normal. And it held it nicely. Thus, this rally is a successful move and not that of a failed move. And now what's going on is that the 23.6 level is $20.86, which is followed by the 14.6 mark of $29.07, and then 9% mark, which has a value of $35.74. Now, how we get these numbers of 23.6 and 14.6 and 9%, what you do is you take 61.8%, multiply that by 61.8%, and you'll get 38.2%. If you take that answer of 38.2 and multiply that by 61.8, you'll get 23.6. Multiply that by 61.8%, and you'll get 14.6, which then brings 9%, so on and so on. And as you get that to these numbers closer to the top value, then you'll just at some point say, okay, we're now making new highs. But because we have held nicely above this $12 level, there should be no reason now why we will not be testing the previous resistance level of 15, because during this time frame here, after we had this big gain throughout the 70s, the market sold off. It stabilized towards this Fibonacci level, and it finally broke out in here. It neutralized or stabilized for about 4 years, a 4-candle bar over this significant level. Last year was the breakout from this point, which is why I'm so bullish on this coming year, which is this year now of 2011, as it now starts to break through, because this was a breakout candle. No reason now to think anything's different. And in fact, there's been a lot of discussion, or at least some discussion, on the Hunt brothers of the past. Well, some people say they cornered the market. In reality, what happened is they knew how currency was created. They knew about the inflation. They realized that silver was a smart bet. They were correct about that. And the mistakes they made was that on margin. They made a lot of mistakes that way, as well as the powers that be for their time that really looked to do anything they could to stop them from succeeding. Now, today what's happening, instead of having just two people like the Hunt brothers cornering the silver market, a lot of it is the generation of the YouTube people today. You, myself, so many other people getting into silver because of the same reasons of how currency is created. And if you're using those reasons to go into silver, then a lot of this stuff here means very little. But what I do like about this is it's like a bowl-shaped pattern. The technicals and the fundamentals, you will usually meet up together, which has been the case in here. And yeah, I'm just going to finish this video. If you like this, I can do another one, like a 44 candle for XAU, which would be that of gold, throughout the weekend sometime. If enough people are interested in that, I can put that together. Thank you very much, and have yourself a magnificent day. Bye-bye.